Robert Tipp, are you ready to call the July hike the last hike?
No, definitely not. Our base case is that, yes, it will be the last hike. Does it feel good to get a 0.2 core CPI print? It absolutely does. Are there reasons to believe that the CPI should be coming down in the future months? There definitely are. But I think that Jerome Powell, the way he's explaining this and the way some on the Fed that may be driving the future changes on this, what they're looking at is, what's the big picture results on core CPI? There's only 1.2 in the last year. There are 2.3s, right? A 0.2 is a 2.4% annual, just arithmetically. 0.3, 3.6. All the others are 0.5, 0.4, 0.6. Incredibly high inflation numbers. So if their motif is that we need to be diligent, we can't stop halfway through the fight and then have inflation, risk having inflation reaccelerate, I think their vigilance is going to be very high until they get a lot of 0.2s, but also some signs that it's going to go even a bit lower than that.
5-year right now at 4.12%. You're looking for that to gravitate towards where Fed funds is right now? You think we could be on hold for that long?
And I used quarters, if not years. And that sounds insane in this day and age in business to talk about years. But the fact of the matter is, I think we're having a failure of expectations to adapt to reality. Markets, this is a bona fide phenomena. They take a long time to catch up with reality. After World War II, it took over 2 decades for the market to realize interest rates were going up. After 1980, it took fully until 2021 area for the market to catch up with the idea the rates were stable or falling. And right now, the markets are fixated on rates coming down in the future. And I think those expectations are going to be disappointed. It's going to be a much more stable, very, very slow disinversion. Yes, a little bit of upward pressure on your 5-year yields.
Interesting.
But very modest.
Robert Tipp, final word.
I think that spreads remaining stable or coming in a bit is good enough. I mean, there are problems in your leveraged loan world. There are troubled credits out there. But by and large, I think having volatility come down, having growth continue, for many, if not most, high-yield companies, investment-grade companies, a lot of high-quality structured product, simply earning the yield over the next year is going to result in good returns. So an unusual bull market underway. Not one where yields are going to have a big splashy drop, but just simply by having yields gone up a bunch and staying here is going to be a productive market.